and I work for CGAP, which is a financial inclusion resource center that's based here in Washington. We're housed in the World Bank, but funded by 35 different members. If you look globally, there's well over 100 mobile money or mobile banking deployments right now that we can count, and 50 of those are in sub-Saharan Africa. If you compare that, there's 18 in Latin America and the Caribbean, 14 in East Asia, 8 in South Asia. So this thing has taken off in a big way, at least in terms of companies getting involved in it. As John mentioned, the biggest success, the biggest numbers at least, are with M-Pesa in Kenya, 15 million users today. We're beginning to see some others come up. Tanzania with 7 million customers, Uganda at 1.5. But if we sort of look at this, it's an opportunity still. We haven't sort of realized the potential. And if you look at the opportunity, you have probably the lowest levels of financial inclusion globally in regions is in sub-Saharan Africa. So the fewest percentage of people who are in the formal or using formal financial services. You also have not very well built out formal financial services. So take an example, Brazil today has 1,500 POS devices per 100,000 population, and places like Tanzania only have 11. So when you get in an environment like that and have 60% mobile telephone penetration, you start to look at that and say, what can we do with it? Because it's reaching a lot more places than anything else we have at this point in time. I would say, and this issue will come up with other people here on regulation in Africa, it's a pretty mixed picture as to how the regulations are set up. Are they enabling? Are they not enabling? But having said that, a lot of countries do have regulations around this or are in the process of developing them. I'd say, John, one of the big things here when you look forward at challenges, just for a moment, is that for all these deployments, these 50 or more, the inactivity rates are pretty high. In fact, M-Pesa has the highest activity rates. That is, of all the people who have an account, how many of them are actually transacting once in 90 days? How many transactions are you getting per account? And pretty well across the globe, but it's true in Africa, where most deployments are struggling with activity rates that are down in the 10 to 20% range, and some of them, in some places in Africa, are down at 1 or 2%. So their companies are paying a lot to acquire customers, but not getting transactions and activity on this. And this is a mass-scale business, and this is a business that really does need transactions going across it. So we do have a ways to go. I think one of the things that comes up as we look at it is that the business models that are going to develop aren't going to be Safaricom and M-Pesa doing it end-to-end. The business models are much more about partnerships. They're disaggregated business value chains, and it's how you negotiate between banks, mobile network operators, distribution companies, technology companies. Some of these business models have 5 or 6 companies in the chain. And even M-Pesa has some of that, but I think that we're going to see a lot more of this go on than we have in the past. We are getting some traction, in fact, around trying to get what we call, proportional or proportionate regulation, where you're managing, risk and inclusion in some appropriate way. I think a lot of times we've gotten it on one end or the other. So if you go back in the history of the Financial Action Task Force, those are law enforcement people. And they've said, well, you can finance terrorism even with 5 cents US. So they want to put regulation right down there. But we're beginning to get some traction. There's actually a new paper that's going to come out within the next week that looks at the role of global standard-setting bodies on this whole financial inclusion issue. And there have been some progress recently on specific issues in Mexico, Pakistan, where we're seeing sort of zero-level accounts that you can sign up for without any identification whatsoever. There's certain limits on them. And the idea is you're graduating people up the system, so you're taking a risk-based approach to doing this. And we're beginning to get some traction. You know, the issue is that for a lot of people who look at regulation issues and financial inclusion, it's not a zero cost to say that we have most of the globe excluded right now. There's a cost to exclusion. There's a you know, if you're going to drive everyone into the informal system, that has a cost in terms of money laundering, in terms of financing terrorism. It has an economic cost to a country. And I think the point we have to make is this is not a game about saying, let's put all these controls in so that we stop something happening. If you take the controls too far and you don't think inclusion, you're going to create more problems than not. And we're beginning to get traction around these messages. We're beginning to get, I think, a little bit more balance than we used to have, but obviously we have a ways to go.
Doing business in Africa, you can't afford to be without Africa Investor.